All right, Mark here. And how's everyone today? Thanks for joining me if you're listening to this stream in real time. So this is another, obviously, a Green Bridge Investing market analysis. I'm going to be covering Bitcoin, the major markets, and a couple of stocks. And also, I'd like to answer some questions if people have questions. I'd like to keep this about 15 minutes. So that's the plan. If I can't get to all the questions or in detail, then I'll put the information in the chat room. Okay, so with that, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Again, if you have questions, just share them in the chat, okay? And here we go. So let's begin with Bitcoin. Now, I sent out a swing trade idea, an aggressive swing trade idea yesterday. The trigger was at 70.25. We never touched it, right? And that's the great thing about using triggers, because although we had a setup and although everything was pretty much in place and everything looked right, never triggered. And if we had taken that just based on our feeling, then we would be in the red right now, okay? But instead, we're able to stand aside and let the market do what it has to do. If we get another setup, especially around the 64.25 area, we'll be interested in another swing trade long idea, at least sharing it with everyone else. The reason why, again, we don't participate in this is because we're long from 57.50, and there's no need for us to add to our risk. So we share these ideas for people that may have missed that trade and that are looking for a continuation pattern to get involved, in a Bitcoin swing trade. So 64.25 and 6,000 are the inflection points, and that's it. Either the market gets there and tests them and reverses, or it doesn't. Okay, so we'll see how that goes. You give this maybe like another day, and then you can cancel that order. If you have the stop order out there. All right, so now that's Bitcoin pretty much. Let's go to the Nasdaq 100. Which is my favorite representation of the stock market. The Nasdaq, the S&P. Andrew likes to talk about the S&P, which is a nice broad, broad gauge of the stock market. The thing is, they all follow each other. The S&P, the Dow, the Nasdaq. They're all going to follow each other, and if they don't, that usually creates arbitrage opportunities. That's why you don't see them deviating usually. Okay. So with that being said, we have this resistance zone around this 85.60 area. And yesterday's candle, we closed way above, and now we're hesitating a bit. That's why in the chat room, again, we started putting stuff like, hey, if you have profits in stocks that you took, that you bought into during the herd mentality pullback, well, this is a great time to take partial profits out of those stocks. It doesn't matter what stocks. All the stocks pretty much rallied from the market low. That's just how it is. Some stocks more than others, but they all pretty much went, right? So if you have a stock and you're up 30%, 40%, whatever it is, it's never a bad idea to lock in something. It's never a bad idea. Even if this thing fakes everyone out, because you're going to have a lot of shorts piling in up here, because that's the herd mentality thing to do. But also, I mean, it's not that out of line because we are in a resistance zone. The thing is, it's a little too early. So, even if this fakes them all out and, you exit part of your position and tomorrow or the next day, the market continues higher inside this resistance zone, you're never going to sell the exact top. So you can't get upset. The idea that the timing value behind this zone is to reduce risk. Okay. These are retail trader levels. This is where the retail traders think it's safe to buy. And it's really not. The risk is very high here because if there is going to be a pullback, the level that we're looking at is this 79.25, or basically the 8,000 level. Okay. So that would be a reasonable pullback, which is a few hundred points from where we are now. And of course, it's going to stimulate a lot of drama and a lot of nonsense in the news, which you cannot let that stuff give you a bias. Focus on the levels and focus on the structures. That's the reality of the market. That's what order flow is all about. So we pull into this 8,000 level. That would be a good place to pick up stocks that you've been waiting to pick up on a pullback, or trade the Qs outright, or the CFD or the futures or whatever it is. That would be the place to really do that for a swing trade. Okay. So right now, there's really nothing to do here but take partials off the table, not your full position. And why? As I explained to one of our members yesterday, I said, listen, you take a partial off the table, but you're still letting the market, you're still giving the freedom to let the market run. You want to let winners run as much as you can. It's not easy to do all the time. So if the market continues to run, you still have a little piece of it at least. And then at some other point, if it gives you a hesitation, then you can get out of that. And at least you were able to benefit more if this does not turn into a sell signal. Okay, so just because there's a red candle there and just because it looks like a bearish signal at the moment doesn't mean it will close that way or follow through. Okay, so let me move on to the DAX. By the way, if you're listening to this, if you have any questions, please feel free to ask. I have no problem answering questions. I just may not be able to answer it in full detail, which again, I'll just take it to the chat room for that. Okay, because I want to keep this around 15 minutes long because I ramble, supposedly. So anyway, okay, here's the DAX right now. Again, for those of you that follow these videos, what do I say about the DAX? The DAX usually follows the S&P and the Nasdaq and the US markets. So whatever they do, this is going to do. That means that the candles that we see on this thing are not going to be as valuable because it's really the Nasdaq, right? It's really the S&P. That's where the timing is going to come from. So how do you use this then? Well, if you're in European denominated assets like I talk about, you use this as a timing gauge, right? Again, just like the Nasdaq, just like the S&P, this would be a place to take partial profits if you happen to have the courage to buy at those lows or on the reverse off those lows or the higher low. Maybe some of your stocks or whatever are not that profitable right now and they're kind of giving it back. But here's the thing, you have to consider the risk, right? If there's a more pronounced pullback, you can see a test of like this 9,300 or 9,400 level. And the question is, do you want to sit through that? Some people have very small positions, and if they're small, okay, you know what? You can take the pain, no problem. You use it as a buying opportunity to average into more. That's a long-term idea, and maybe you're collecting dividends on the stock, whatever it is, that's fine. But if you have a larger position and you are looking to get out, in a shorter period of time, this is the place to do it, okay? Just to unload, take partials, or reduce risk off of, maybe you have a non-performer. It should be doing better than it's doing. Get out, take some profits, or just reduce risk, even if it's a small loss, okay? That's the best practice in this situation. We're not fully recovered yet, and these markets they're still in a tough spot. So it's not really worth taking the chance that this thing develops a solid support off the next support level. It can break and test the lows. It's possible. Do you want to take that chance? That's up to you. Okay, so let's move on now to oil. Now, oil is something we've been watching oil very carefully. We had a swing trade not too long ago in it, and it didn't behave very well, okay? Now, oil, right, we had a long originally way back here, and we got out of it, right, for a small loss. Then we didn't take this signal here, but we talked about the 1830 level, right? Now, oil right now, it ran to this 28 high off of that news or whatever it was, nonsense, okay, who cares? And it developed a lower high. Now, there was a sell signal up there, but here's what we've been telling our members. This is it's in an area, the location is a tough place to go short, unless you're day trading, unless you're looking for a small bite, that makes sense. But if you're looking for a bigger picture type of move, if you think oil is going to go to 10 or 15 on some opinion or someone else's opinion or some news that you read somewhere, that's irrelevant to the market. We're looking at the probability of the location, okay? Now, that 1830 level, it needs to hold. It's possible that we get a double bottom in that area. If we do, and we see a buy signal in the area where it is right now, because you can have a double bottom variation. It doesn't have to be exactly a double bottom. We'll go for that swing trade long again, because here's the reason, the potential. The key resistance on oil is 36, which means that price can push anywhere from 1830 to 36, basically, fool around inside that zone and still be bearish on the bigger picture. Okay, because besides the location, there's nothing bullish about oil. So it doesn't mean, though, it can't go into a range for a little while, and we're willing to play the potential of the higher part of that range. It doesn't even have to get to 36. Even if it gets to 30, that's pretty good, right? So there's a lot of potential there for the, in terms of risk reward for the long side compared to shorting it on these lows, which is very high risk. Because again, you can have that failed low where maybe it goes to like 1750 or 1685, and next thing you know, it's back to 23, right? We don't want to get caught in that. We'd rather play that side. We'd rather play those shorts who get caught, okay? Or play against them, I should say. All right, so that's oil. Any questions, again, please ask in the channel. So now let me move on to, I had a couple of stocks, all right, that I wanted to talk about. And the first one, because again, I want to keep this around 15 minutes. The first stock that I want to talk about was Inmode. All right, let's go to Inmode really quick. Now, Inmode, the reason why I was looking at the chart earlier today. Let's go take a look at that. It's one of the stocks that we follow very closely and, our members are involved in as well. And look at this. So the key resistance on Inmode is 28.25, basically, right? And look at yesterday's close, right? What is that? That's a pin bar, all right? We also had a pin bar recently before that. This is a double top. Not only that, we haven't taken out this key resistance at 28.25. This is not great, okay? Now we do have the higher low in place around this 20 level. So the double top doesn't guarantee we're going to have a bearish reversal and take out the low and push lows, but it's definitely not a sign of strength near a resistance. It would have been nicer if we took out that resistance first. Okay, so if you're in this or you're involved in something like this kind of situation right here is actually a sell signal. Now, if you have Inmode, should you sell it? The question is, are you willing to take the chance that this thing retests 20 and breaks? Okay, if you're willing to take that chance, then that's your answer. You give it a chance and you let the market play out. Because again, just because there's a sell signal doesn't guarantee it's going to follow through. Remember, these things move relative to the broad market. So if the Nasdaq fakes out, what do you think these things are going to do? They're going to fake out and go higher as well. So you got to just keep that in mind. This is, again, a great opportunity. If you bought a certain number of shares and you say, hey, I would like to lock in some profit, this is the time to really do that. And then maybe give the other smaller portion of the position a chance to run further. And if it doesn't and breaks the support, well, at that point, you can get out for your small loss or break even or whatever it is. And that's the trade. That's the market. I mean, that's how things work. It's all about probabilities, right? You have to be flexible with these things. So that's Inmode. And the other one I wanted to talk about here was Canopy Growth. Okay, now I know pot stocks the cannabis stocks have been very unpopular. No one likes them, right? And here, let me go to CGC. Where is that? I know I have that here somewhere. Hold on. And here's the thing. So, do I have it on this list here? I think I do. Right, here it is. Okay. CGC. Look familiar? It's the same situation, right, as Inmode. Key resistance. Well, actually, we have two resistances on this thing. There's the 15 level here, like 15.5, which is forming a double top. And then we have one way up here at like 28. 28 is actually the key trend resistance for this thing because the trend on these cannabis stocks is still bearish. In fact, I took some notes. I wrote some notes on here and I noted that up here, right? 28.33 is the key resistance. Now we also have a key support around this $12 area. So the question is, do we pull back and do we hold the $12 area? Now, I don't care about fundamentals. Some people may come out and say, well, the cannabis sector, they don't make any money and there's corruption and blah, blah, blah. I don't care. Okay, if that was the case, why did we rally off of this low and why didn't we go to zero? So, people buy, institutions buy, there's a lot of inside information that we don't know and reasons why people buy and do things, okay, especially large players. We don't have access to the same information that they do. So they, in a sense, have, they can gauge the reward risk better and they can take much bigger positions because they're in the know. They have inside information, which some of it could have been acquired illegally. But hey, we're not, that's not something that we can do. So as a retail trader, we have to rely on technical analysis to give us clues of order flow and the intent of the market. And that's what we have here. So when we have an initial push, like we had off of that $9 level to 15, well, that is some sort of sign of strength. Usually a trend reversal begins with a very strong initial push like that. So the thing is, do we pull back to 12 and develop a higher low? Or do we fake out with the rest of the market if the market fakes out and push through 15? The market needs to answer that question. We can't predict it. But here's the thing. If you have some of this stock from a low price, again, this is not a bad place to unload and take some profits off the table because you're facing the risk of going back to 12 or maybe lower. I mean, you don't know with these things. We had another one, Aurora Cannabis, which I mentioned as a very aggressive trade, and pulled back. It was like 89 cents, and it's like at 74 cents now. Okay, I mean, they're not behaving very well. So you can't sit there and say, well, what if I miss out? What if it goes higher without me the next day? You can always get back in. So just keep that in mind. That's what these things are. They're fooling around these key resistance levels, Inmode, CGC, and we're looking at the support level at around $12. Now that would be a great place to pick up some shares if you get a reversal in that area. Okay, that would be a much better opportunity in terms of reward risk. All right, so just wanted to put those things out there. If you have any questions, please let me know. All right, because I'm going to wrap this up here. I got about 30 seconds. Any questions here for the video? And then if not, I can always answer them in the chat room. I want to thank you for watching, taking the time to watch this. Again, if you're new or if you're just seeing this video on our YouTube channel, we're Greenbridge Investing. Check out our website, greenbridgeinvesting.com. Thank you again for watching. Have a great day, and I'll speak to you soon. Bye.